All right, hey everyone, good morning. Welcome. Sorry, I'm trying to figure out the CPI data comes out right now at 7:30, so we're trying to figure out where it is so we can see how our markets are going to react to it. Because if it comes out um, lower than the trade is expecting, I think that that'll be really supportive to markets because um, it'll mean that the Fed may take less action. But on the other hand, if it comes out worse, then that could increase selling pressure based on um, the risk of heightened future action among the from the Feds. Okay, let's jump into it here because I haven't seen. Well, apparently the market's not liking it very much because we've just sold off 89 down to 82 was the initial reaction off of that. Okay, let's jump right into it, okay? So this is the 30-minute chart of December corn, and I wanted to show you this because this is the action from last Thursday. It's absolutely insane, right? We bottomed at 566 on Thursday around midday, and then we rallied it Sunday night. We had the weather start to move in, and we had this big gapping action. We had a straight vertical ascent, right, all the way to 658. So we rallied darn near $1. And then Sunday night, right out of the gate at 7:30, the selling started, and the selling just never did relent, and still hasn't really relented yet. And so the question is well, oh my gosh, we must be done. The USDA must be super bearish. They must have found all kinds of corn, and our balance sheet's gonna swell and grow, and we're never gonna have another rally again in the markets. And what I want to do is just kind of systematically walk through one line at a time and show you where I really think the risk is after reading everything. And I think yesterday the corn market, bean market, wheat market got absolutely pummeled in anticipation of today's CPI report. I think it had everything to do with macro meltdown. You had crude oil off $8, and I think that just spilled over into the grains like crazy, because I don't think it makes sense given the fundamentals on the grain side. So let's start with our balance sheet, okay? This is the July balance sheet that the USDA gave us yesterday. And what I want to highlight are the differences from last July, because there's a few things that just don't really add up and make a lot of sense. So they gave us 89.9 million acres. We're going to harvest 81.9 with a yield of 177. Beginning stocks is 1.5 billion bushels, and production will be 14,505. So what the difference is from last year in relationship to these numbers really summarized right here. So we lost 485 million bushels of production, and so the USDA just, boom, like a magic wand, found 400 extra million bushels in supply. And they didn't find that in world supply. They found that in domestic supply. So the world supply numbers went up and the domestic numbers went up. So let's talk about that for a minute. 1 year ago, with a beginning stocks number of 1.1 billion bushels, which is way below pipeline, our basis levels were trading 80, 90 cents over. And today we're a solid $1 a bushel over in certain spots where we were a year ago. And that's with nearly half a billion bushels more than what we had a year ago. Maybe it's true, but I really don't think so. I think that the USDA is managing to a number, and I think the number they're managing to is this number right here. I think that the USDA wants a 10% stocks to use carryout, because that is anything above it is friendly and plenty of supply, and anything below it is less than that. And don't get confused with whether or not this number is fact or not. They're guessing. They're pulling data in from lots of different points, and they're trying to figure out where they are. this number is a complete guess, and let's talk about exactly why. From a weather standpoint, the forecast, flipped yesterday. Sorry, this thing is making it hard for me to find my tabs up here. So the weather forecast flipped yesterday and became wetter across the Corn Belt. Well, this is this morning's 5 to 7 day precip outlook published by NOAA. And if you can look, this blue splotch right here is forecasting 1 1/4 inch of rain, but everything else over here is below that. So you've got into the peak of pollination, we've got less than 1 inch of rain across the entire ag belt. And in a lot of spots, we have 0 rain in the forecast, coupled with a 8 to 10 day outlook with a massive ridge on top of it, centered right over Nebraska and Iowa. So how are we going to magically generate a yield number that's 177 or above with those kind of pollination rules, right? I mean, you have to have rain if you have extreme heat, and you have to have rain if you have without it, you're just not going to grow it, right? So somewhere at some point in time, we have to get some rain. Now, what does all that mean? Well, if the USDA, and let's think about ranges, if the USDA is off on this number by just a little bit, maybe it's not off by 403 million bushels, but let's just pretend it's 150 million bushels. Okay, so let's say that this number is not 400. Let's pretend it's 250, and our demand number doesn't go down because people are still driving and they're still coming off of lockdowns and all those things. Well, in that instance, our carryout is all the way down to under 6% and 870 million bushels with just a yield of 174. So what is 174 good or bad? Well, this is like the 6th or 7th best yield we've ever had, with the largest ridge that we've had at pollination since 2012. So the risk here is not a 180 yield. The risk is a 174. And the risk is that these basis numbers aren't lying to us, and that there is actually a tight old crop supply and tight farmer hands because they have cash. So if that's the case, then the risk is that this 147 number actually drops down. Now, the reason I'm telling you that is because I don't think on July 13th that it's panic time that we got to crash this market, because that's way too much risk for us to take. You got to put some weather premium in just to make sure that this does not turn into that, okay? Because the only way, if this number doesn't work, then you have to start killing demand. And we have not seen that yet. That's not coming across in any metric other than export sales, which, let's face it, are more driven by political reasons than they are actual supply and demand. Because the other mystery numbers that the USDA posted yesterday, both in beans and corn, were increasing global supplies. And I went through country by country, not through the USDA numbers, but through the country numbers, and I couldn't find a single one that the USDA said had an increase that also had an increase. I can't find a single country that says they have the amount of grain that the USDA says that they have. So I don't know where they're getting their numbers, but that's kind of where they're at. So let's jump into the technicals and let's look at what it says, okay? So 30-minute chart, massive rally, huge gap, immediately filled it, pummeled it, and now here we are. We must have had some sort of bearish CPI number. I think we priced that in yesterday. Now I think we go back to weather, and I think we've got to start trading that table I just showed you, and we got to start trading that range of expectations from 10% to somewhere under that. It's not probably as bullish as under $1 billion, but it's also not going to grow to 1.5, 1.6, 1.7 until harvest. So I think we're going to rally corn, and I think corn is where's my Here's our weekly chart. All right, here's our weekly chart of corn. I just showed you 30 minutes. Here's that same move, right? We have a piercing pattern last week. We turn around and we rally it. We rally it to 659. Now we have this big engulfing bar down. Absolutely pummeled it. It's Wednesday. I wouldn't be a bit surprised to see us close this week back above this 659 number. If the weather forecast starts high and dry, corn could really put this back on in a hurry. I mean, it can put it on absolutely as fast as it takes it back off, right? And then at that point, I think some decisions have to be made. So let's back out to daily level. So here's your daily December corn chart, okay? We're straight down, we're straight back up, we're straight back down. Now I think we march a little bit higher. And I think we come all the way up into the $6.89 to $7 area, and I think you got to sell it. And then I think we're lower down into harvest. I think we've got to price in a yield sub 175. And I think we've got to price in these basis levels. You know, we're selling basis levels 30, 40, 50 cents above where they were a year ago, and over $1 higher in some places around Kansas. That's not screaming tight supply or loose supply and plentiful corn stock. So futures are going to have to reference that. I really like this low right here as a pivot point. Anything above it, I think you got to trade long. And if we start to break below it and close below, which we have not done yet, we've not violated this on a closing basis. If we do start to close below this 577 level, then I think we'll start to talk. But this range of probability is all the way down to this peak and this low here. So you've got a peak at 565, a low at 565, and 577 that you want to work from. Anything above that with the weather forecast that we have, I think it's got to be owned, because we just don't have the room for this thing to work that much lower. All right, that's our take on corn. Let's look at soybeans. Soybeans are really interesting because the USDA is working with millions less acres, and yet they continuously just find new supply, even though no one has had a good harvest. It's really amazing how good they are at finding bushels. And so very similar to corn, what the USDA has done is given us these numbers to work with, and here's the impact of 1 bushel to the acre. 1 bushel to the acre decline drops our carryout to below pipeline. So if the trade decides to look at that number, then look out above, because beans will need to be rationed again. Now, so why are they getting pummeled? Well, it's because oil's getting pummeled, right? The story from the veg oils, the palm oils, the energy seems to be subsiding slightly, just based on global macroeconomics. Then you start to read stock headlines and you look at American Airlines, United, Delta, and you start asking the question, are they looking at a recession? And the answer is no. The guidance that they're offering out to their investors is the most bullish guidance that they've seen in the last 5 years. They are extremely optimistic about return to air travel and people moving around as people as companies put people back into offices and back into the workforce, and move away from the stay-at-home stuff that we've been doing since 2020. That's all bullish aviation fuel, which is super bullish soybeans based on our aviation mandates that we have. So I don't think beans have a lot of room to break here either, just based on all of that and based on this chart pattern. So one of the things that we can do to identify a corrective wave is a price channel. And even though we're super steep, we're still contained within parallel lines on a closing basis. And we seem to be holding this shelf right in here between 1315 and I'm just going to call it 1250. So there's a shelf of support right down in here. And like corn, with the tightness on that balance sheet and with the lack of data coming in showing that we're slowing it down, you've got to start to look upwards in beans as well, or at least sideways. So I don't think it's rush to the panic store and press the sell button across everything else. In fact, at this level, above this $12.75, $13 level, I think the most prudent thing to do is to look to re-own it and hedge your usage needs if you're going to be a buyer of beans. Okay, now let's talk about the ugly one, wheat. Right, wheat is just getting absolutely pummeled. It was part inflation, part Ukraine, part global tightness that drove us up to $8 in the first place. Ukraine and inflation pushed us to 14. Now we seem to have taken all of that risk premium out, yet not one thing has slowed down there. In fact, our supplies are really no worse than anybody thought that they were. Right, we don't have a whole lot of extra residual supply than what we thought we had, but yet everything in the Ukraine that I can read points to less crop, less exports, more damage, and continued fighting. I'm not reading anything that substantiates this whole humanitarian corridor for grain flow nonsense that keeps getting percolated through the headlines. I'm not finding any concrete data that says that. In fact, everything I see and find suggests the opposite, that the Russian forces continue to hamper and deter anything coming out of the Ukraine. So that's still not bearish wheat. So we've consolidated. We've taken us down the elevator shaft. Now we're starting to consolidate. Monday's trade was absolutely crazy, but I think we're going to find a little support here and rally this thing right back to this 38.2% up to 1041, which is where I think you got to be a seller. Somewhere between 10 and 1040 is what we're looking for, and I think that's where you want to sell it. I don't know when that's going to happen, but the seasonals for wheat tend to turn bullish around the middle of July, which is right around here, and we've had several weeks to digest harvest pressure, and we've had several weeks to price in any of the bearish news flow that we've had. So if corn starts to work higher, wheat's its cousin, it's going to go with it, and beans should stand on their own from that point. So in conclusion, in the last couple of minutes, let's think about what we just said. I'm not saying we're going to all-time highs. If these weather forecasts had been 2 weeks ago, we'd be at $10 corn, no question about it, because we were poised to do it. As it is, I think we got to rally it back to 7 to price in some of this weather, and then I think we're going to put some pressure on it. But I don't think we're going to $4 corn or $5.25 or $5. I don't think that's going to happen based on the fundamentals and the news flow that we have. But if those levels, if these lows start to break, lows and prior shelves like what we talked about on corn and beans, if they start to give way, then that's where we want to look for lower prices and to be very aggressive getting stuff removed. And now let's talk about how we're going to start selling stuff if we have to. Let's get down to the nitty gritty here. So we've got these ranges here that have been established, right? We're looking for a move back up in here to 7, which then would give us this range to sell against. What I'm going to recommend doing is selling cash and selling out of the money calls. What we want to do is collect premium in here, and that's going to be up to each one of you guys how much premium you want to collect, and how aggressive you want to be. With short calls, you do have the upward risk of potential margin calls, and they can be somewhat painful if the rally keeps going. But if we get up here and we think, hey, we're going to $10 because our crop's going to be a 166 because this dome and doom really did hit, and Iowa doesn't get more than doesn't get the rain we thought, then we're not going to sell them, right? In fact, we're going to do the opposite. We're going to buy it like crazy. But if we get up here and the weather's and things are kind of the same, then we're going to look to sell 7, 720, 750 and collect as much premium as we can against a short futures position. And then we'll sell it all the way down into harvest, which at that point we'll probably in October, November look to start re-owning bushels because now we gotta reset and go back to trading tight balance sheets again, depending what our final yield is. So I hope that's somewhat helpful for what we're looking for. Definitely uncertain times. Definitely did not see this week coming after last week's strength and the weather that we have. But I don't think it's anything related to corn. All right, that's our 20 minutes. If you have questions, please call us. We're happy to talk through anything specific that you want to go through. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. We will talk to you next Wednesday or sooner if need be. Have a great weekend.